Stocks. Stocks mean buying a small piece of a company. When you buy a stock, you become a part owner of that company. If the company grows and makes profit, the value of your stock can increase. But if the company performs badly, the price can fall. Bonds. Bonds are like giving a loan to a government or a company. When you buy a bond, you are lending them money. In return, they promise to pay you interest over time and return your original money later. Mutual funds. A mutual fund is a pool of money collected from many investors. A professional manager invests this money into different assets like stocks and bonds. This helps reduce risk because the money is spread across many investments. Exchange traded funds. ETFs. ETFs are similar to mutual funds, but they are traded on the stock market like stocks. They usually track a group of assets such as an index, industry, or commodity. They are popular because they are easy to buy and usually have lower fees. Real estate. Real estate means investing in property like houses, apartments, or land. Investors make money by renting the property or selling it later at a higher price. Cryptocurrency. Cryptocurrency is a digital form of money that exists online. People invest in it hoping the price will increase. However, it is very volatile, meaning prices can rise or fall very quickly. Gold. Gold is one of the oldest forms of investment. People buy gold as a way to store value, especially during economic uncertainty. It can be purchased as jewelry, coins, bars, or through financial markets. Silver is similar to gold but usually cheaper. Investors buy silver to protect wealth and also because it is used in industries like electronics and solar panels. Commodities. Commodities are raw materials such as oil, wheat, coffee, or metals. Investors trade these goods hoping to profit from changes in their prices. Index funds. Index funds are investment funds that try to copy the performance of a market index, such as a group of top companies. Instead of picking individual stocks, investors buy the entire market through one fund. Treasury bills. T-bills. Treasury bills are short-term investments issued by governments. Investors buy them for a lower price and receive the full value when they mature. They are considered very low risk. Fixed deposits. FD. A fixed deposit means putting money in a bank for a fixed period of time. The bank pays you a guaranteed interest rate, but you usually cannot withdraw the money until the time period ends. Savings accounts. A savings account is the simplest type of investment. You keep money in the bank and earn a small amount of interest. It is very safe, but the returns are usually low. Certificates of deposit, CDs. Certificates of deposit are similar to fixed deposits. You lock your money in a bank for a specific time and earn a fixed interest rate. The longer the time period, the higher the interest may be. Hedge funds. Hedge funds are investment funds that use advanced strategies to try to earn high returns. They are usually available only to wealthy investors and may involve higher risk. Private equity. Private equity means investing directly in private companies that are not listed on the stock market. Investors try to improve the business and later sell their stake for profit. Venture capital. Venture capital is a type of private equity that focuses on funding new and fast-growing startups. Investors provide money in exchange for ownership in the company. Real estate investment trusts, REITs, are companies that own and manage income-producing real estate like shopping malls, offices, or apartments. Investors can buy shares in REITs and earn a portion of the rental income. Futures. Futures are contracts where two parties agree to buy or sell an asset at a fixed price on a future date. They are commonly used for commodities like oil or wheat. Annuities. Annuities are financial products usually offered by insurance companies. Investors pay money up front, and in return they receive regular payments in the future, often during retirement. Collectibles. Collectibles include items like art, rare coins, antiques, or vintage items. Their value depends on rarity and demand, and investors hope these items become more valuable over time. Startups/angel investing. Angel investing means providing early money to a new startup business. In return, the investor receives ownership in the company. It can bring huge profits if the startup succeeds, but many startups fail. Peer-to-peer lending. Peer-to-peer lending allows people to lend money directly to other individuals through online platforms. Investors earn interest from the borrowers. Foreign exchange. Forex trading involves buying and selling different currency. Investors try to profit from changes in currency exchange rates between countries. It is one of the largest and most active financial markets in the world.